Ladies and gentlemen, good day and welcome to the Solar Industries India Limited Q1 FY23 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder to all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prasheel Gandhi from Nirmal Bang Equities. Thank you and over to you, sir.
Thank you, Renju, and good morning to all participants. Nirmal Bang Equities welcomes you to 1Q FY23 earnings conference call for Solar Industries India Limited. From the management, we have Mr. Manish Nuwal, CEO and MD, Mr. Suresh Menon, Executive Director, Mr. Monish Agarwal, Joint CFO, and Ms. Shalini Mandana, Joint CFO. I now hand over the call to management for opening remarks, post which we can take questions from participants. Thank you and over to you, sir.
Thank you so much, Kushi. A very good morning, everyone, and welcome to this fiscal first quarter review conference. My name is Anchal, and I would like to welcome all of you on behalf of Solar Industries India Limited. On the onset, let me restate, we might make projections or other forward-looking statements regarding future events and about future financial performance in the call. Please remember that such statements are only predictions. Actual events or results may differ materially. Our website will be updated with all the relevant information from time to time. Now I would request MD and CEO, Mr. Manish Nuwal, for his opening remarks on the company's performance for this quarter. Over to you, sir.
Good morning, everyone. In this challenging environment where businesses were impacted due to supply chain disruptions amid Russia and Ukraine conflict and currency volatility, we achieved highest ever quarterly revenue of 1616 crores, a growth of 96% year on year. And our net profit is rupees 183 crores, a growth of 81% year on year. It demonstrates the real strength of our company. During this quarter, significant increase in revenue was contributed by international businesses and non-coal India and institutional sectors, which showed a growth of 90% and 180% respectively. These numbers are the true reflection of our efforts put over the years to nurture overseas business and expand based in non-coal India limited customers. Revenue from defense stands at rupees 64 crores, up by 37% year-on-year basis, and is likely to start gaining momentum from next quarter. Our EBITDA margins during the quarter got contracted due to elevated raw material prices and lower realization from one of our key coal customers. The company has taken a strategic decision to invest in North India-based explosive manufacturing company after taking recent investments in Skyroot and Red Motion to increase the product portfolio for various high-end applications and increase its geographical footprints to continuously move towards Unnati ke safar par. Going forward, high inflation and consequential policy rate tightening measures can impact global demand. However, government's thrust on building housing and infra, rising coal demand, and Atmanirbhar Bharat promoting towards indigenization of defense products will definitely help us to achieve the annual growth guidance which we have given earlier. Now I will request Anchal for quick update on quarterly numbers.
Thank you so much, sir. I guess we are perfectly following our motto, Unnati ke safar par. We are again back with yet another highest quarterly revenue and profit. It gives me immense pleasure in sharing our success journey back to back with our shareholders and potential investors. We grew at laudable pace in Q1, registering revenues of 1616 crores, up by 96% year-on-year. EBITDA at 292 crores, up by 66%. PAT at 183 crores, up by 81% year-on-year, demonstrating the strength of our business in a challenging environment as elaborated by our MD. Now let's quickly review the quarter in detail. Explosives, the domestic volume in the quarter increased by 13%. Our realizations of explosives showed a growth of 74%. As such, explosives revenue was up by massive 97% from 419 crores to 824 crores. Revenue from initiating system was also up by 20%. Revenue from our customers, revenue from CIL was up by 76%. Revenue from non-CIL institutional was up by massive 181%. Revenue from housing and infra was up by 83%. Export and overseas revenue grew by 90%. Defense revenue was up by 37% year-on-year. Coming to our cost, raw material, the consumption cost increased by massive 127% in absolute terms from 469 crores to 1067 crores. Employee cost was increased by 11% from 68 crores to 75 crores. Other expenses cost has increased by 69% from 113 crores to 191 crores. The EBITDA margins for the quarter saw contraction as elaborated by our MD, but in absolute terms, the same grew by 66% from 176 crores to 292 crores. The interest cost has gone up by 39% in absolute terms from approx 10 crores to 14 crores. Depreciation has increased from 25 crores to 31 crores on account of capex in the previous year. The profit before tax stands at 247 crores compared to 140 crores with a growth of 76% year-on-year. The net profit in absolute terms is up by 81% from 101 to 183 crores approx. Now we would be happy to take any questions, comments or suggestions that you may have. Over to you, Prashil. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravi Naredi from Naredi Investments. Please go ahead, sir.
Definitely in this tough time when geopolitical issues are there, our company really grow in your leadership. First of all, thanks to Manish, उन्नति के शिखर पर to उन्नति के शिखर पर, सफर पर to शिखर पर. Sir, out of 3,843 crore order book, how can you bifurcate between defense and non-defense, sir?
Yeah, surely we will give you the breakup. Currently, defense portfolio is 538 crores and rest all is non-defense.
Rest is non-defense. Thank you. And sir, how much raw material down in Q1 and July, and how much time lag we need to transfer to consumer?
Sir, definitely the prices of our key raw material has already started softening. But we have seen lots of ups and downs in last 1 year. So it is very difficult to give practically a look at what will happen in the Q2. But definitely, if we look at falling prices of other raw materials,
reflected that last quarter we had a forex gain of around 16 crores, and in this quarter we have a loss of around 28 crores. So one was that, and secondly, the increase in raw material prices, as there's always a lag in passing on the prices. So due to these two reasons, the same has been affected. The PBT has been affected, and the third reason is where we had some tax benefits in last quarter in one of our subsidiaries. So as a result, the PAT in this quarter is increased only by 5%.
Okay. Ma'am, can you repeat that forex gain 80 crore and forex loss 28 crore, right?
16 crores was in quarter 4, and in the current quarter we have a loss of around 28 crores. That is the unrealized loss.
Okay. And 16 CRs, right? 16,
16, correct.
Okay, ma'am. Thank you so much. That's it on my side.
Yeah.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead, sir.
Yeah, thanks for taking my question. Congrats on a great set of numbers, especially on the overseas side. So on the overseas, can you list out what are the factors which you see playing out over the course of next 1 to 2 years, or next 1 year in particular, in terms of volumes? Which are the new geographies which will contribute incrementally? Have any new geographies started contributing to volumes this quarter? And second question which I had is that now the raw material prices have dropped very sharply, and probably the impact will be visible in the next couple of quarters. What will be the normalized overseas margins be when the dust settles in terms of softening raw material prices? Is it safe to assume that it will be back to 20-21% level? Thanks. That's all from my side.
Thank you, Abhijit. The first point is that the growth in our overseas business is mainly on account of volume growth, which Shalini has already shared, that it is around 15 to 18%. Second reason of growth is that wherever we have invested in last couple of years have started giving the returns of our investments. Third, in this quarter we have not added any new country, but definitely in the next coming quarter we will finish the plant in Australia. That will start commercial production from the Q3, and we are also likely to start our Indonesia plant from Q3. So those territories will definitely add or help us to increase our revenue further. As far as your question on falling of raw material prices, so like we have already said that we have assumed some increase in the last couple of quarters, and we are expecting that these prices should soften in the coming quarters. So based on that, we have given a guidance that we should be able to achieve a target of 30% growth in our revenue. So definitely once half year numbers are over, we will come out with another positive set of guidance for the whole year. And I believe these commodity prices should soften a bit, and that should help the demand to increase, and that will help us to sustain the current businesses.
Right. A bit of thought on the margins, because on the domestic margins, while the absolute percentages might have declined, but on a per ton level we see a relatively steady performance. So I was more thinking on the overseas side, when the dust settles in terms of dropping raw material prices, is it fair to assume that 20-21%, 22% range of margins in the overseas business will be brought back? I think that will be the
In the current quarter, our EBITDA margin is around 18.03%, 18.05%. And if you remove the factor or the impact of currency loss, then it definitely adds up to almost 1.5% to the bottom line. And if you factor in that, it is already at 19.5%. So definitely we believe that once prices start softening, the EBITDA margin should come to the normal range of around 20, 21, 22%.
Okay. Okay. Great. Great. Thanks. I'll come back in the.
Okay, thank you.
Thank you. Next question is from the line of Aniket Mittal from SBI Mutual Funds. Please go ahead, sir.
Yes. Just to understand a bit more on the Australia and Indonesia expansion that you're doing, I think you're setting up cartridge and detonator facilities over there. If you could maybe throw some light in terms of the capacities that you're building there, and what is the kind of revenue potential that you see from these two geographies over the next 5 years?
At the moment, we can share some facts that we are setting up a bulk plant in Australia, and in Indonesia, we have already started detonator manufacturing and initiating system section, and likely to finish another sets of products in coming quarter. So as far as start of these two ventures are concerned, in next 1 or 2 quarters, we will start the commercial productions. And as far as future potential of next 3 to 5 years concerned, it is too early to state anything on that side. So we will definitely keep sharing on the progress on these ventures, and we will share the progress report or our prediction or projection out of these ventures.
Sure. Just the other question was actually a bit more on the coal side. So if I look domestically, I think what's happening is we're seeing a large amount of increase in production coming in, not just from the likes of Coal India and SECL, but a lot of these captive and commercial coal blocks are also coming through. And I think if you look at the data, I think some of these mines have overtaken SECL as well. So when you look at that piece of the segment, is there any sort of increased demand that you see coming for your explosives from some of these captive and commercial coal blocks?
Yes, sir. I think the coal production in this year is poised for an increased growth coming from the government sectors like Coal India, Singareni, and also from the private sectors. We have seen the first quarter the private sectors have done and have grown well as far as coal production is concerned. So going forward, I think the demand from this coal sector will be increasing for the year, and it bodes well for us from the explosive side.
Are there any sort of tenders that you're seeing from any of these captive and commercial coal blocks coming in for your explosives?
In this year, we don't see it. Probably in the next year, we will see tenders coming in. And the private sectors, they come in on and off as the period for the tendering comes up.
Fair. Just one question on the defense front. I think on the Pinaka Mark 1 enhanced, there has been tests that have done, I think, earlier this year. If you could just highlight in terms of tests that have been done in the RFPs on that front, how do you look at those coming out for Pinaka Mark 1?
The Pinaka tests, are in the final legs. So once
We will share all these details once the deal is completed.
Okay. Okay, sir. Yeah, thanks a lot for your time, sir.
Thank you. Next question is from the line of Rohan Gupta from Edelweiss. Please go ahead, sir.
Yeah, hi Manish, good morning and congratulations on such a strong set of number in such a challenging environment, sir. Congrats to the entire team. Sir, a couple of questions from my side. One is on this softening raw material prices. So we have seen that definitely on a Y&Y basis, the AN prices has been continuously going up, and even in Q1 also it has gone up from Q4, as you mentioned, roughly 10%. But despite this sharp rise in prices, input prices, we have been broadly maintaining our EBITDA margins in terms of percentages. Still, we are at close to 18 to 19%. If we adjust for the forex, you are close to 20%. Just wanted to understand, sir, when the raw material prices will start softening and if they go back to the previous levels. So, do you see that our margin profile will remain same at 20% kind of margins, or you see that it is going to stabilize at a much higher margins of 25 or 27% range? Because right now, whatever the price increase which we have seen that is also going or is helping us in EBITDA growth also in line with the top line growth. So just want to understand that the scenario when the raw material prices will start softening.
Yeah. Hi, Rohan. As said by Manish, he said like next quarter around 10 to 15% softening should be there in the raw material prices. So once there is stability in the prices, we feel the margins should sustain at around 20 to 22%.
Okay, so it means that with the falling raw material prices and sustaining margins in 20 to 22%, probably we may see a flattish kind of EBITDA growth despite volume-led growth, because it seems that our EBITDA per ton has improved significantly in the entire rising price scenario, isn't it?
Yeah, Rohan, we will answer to this question in the same fashion what we did, that based on our guidance, we maintain that we are expecting 20 to 20% EBITDA margin for this year. And that is also depends on the commodity prices. So at the current elevated raw material prices, we expect that 18-19% is a sustainable margin level. And going forward, like everybody is expecting that there will be a softening of commodity prices due to various factors, either it is recession or some other factors. So we also expecting that prices should start softening. Based on that, we are saying that we expect 20-22% is a reasonable margin. Whether you convert it into the value terms or per ton, that's we cannot answer to that.
Fine. So second question is on, you mentioned that our Indonesia facility where we are planning to put the detonator facilities and some other value-added product basket. So I understand so far now these products we were manufacturing in India and were primarily supplied in India and also probably being exported from India itself. So any particular reason that we are setting up the facilities for these value-added products in Indonesia? Are there any cost advantage or any other particular reason that this Indonesia is a market we have chosen for those value-added rather than India for ramping up the production facilities in all these value-added product basket?
So like we have already shared in previous investor calls that we are entering into that market with some reasons. First reason is to, when you are present in a particular country, definitely your reach to the customer is always better instead of supplying from India to Indonesia. So based on that, we have decided to invest in that country. Second is that once we are there, definitely supply chain related headaches which have started coming in last couple of years. Every country want to have the manufacturing base in a particular country. Indonesia is a big market. Looking at that potential, we have decided to the manufacturing base in Indonesia.
Okay. And sir, in our international markets operations, so definitely this year focus will be on Indonesia and Australia and ramping up the facilities. are we in a process of identifying any other geography over next 1 year or 2 year in the near term for further expansion, or focus will continue to remain on existing geographies only?
No, at the moment, our focus is to increase revenues from our existing facility, and once these are over, then definitely we will look for the new geographies.
Right, sir. Also, just last bit on defense. We have seen close to 46 crore rupees kind of revenues coming from the defense in the current quarter. Just wanted to understand, sir, we have this multi-mode hand grenade revenues already in place. So, do you see that is there any seasonality, because that kind of order of 450 to 500 crore rupees for community for next 2 years? So, will it come on a quarterly basis, or you see that there is a lumpiness in some quarter garnering more revenues and some quarter being impacted as far as this business is concerned in defense?
We have given a guidance of reaching or crossing 400 crores in this financial year, and in this quarter we have already done 64 crores, which is up by 37%. And we have already mentioned that from next quarter there will be a more momentum in sales of defense products. So in products like which goes for defense application, it is not the season which impact the demand and supply. There are various other factors related to supply chain, production, qualification. So there are n numbers of factors which impact some ups and downs. So based on that, we are saying that from next quarter there will be more momentum towards sales of defense products. And we are confident that in the whole year we should be able to reach to our target of 400 crores from defense sales products.
Fine, sir. Thank you, sir. Thank you so much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Pratik Mukasdar from RNL Investments. Please go ahead, sir.
Manish, congratulations on a fantastic set of numbers to you and your team. Sorry I missed your initial address of first 5-10 minutes, so I would just request you to, can you just brief of what led to such a great result? Number 1. Number 2, how did you manage the raw material inflation which happened in April, May, June? And now that prices are falling off, how would it affect us when the prices were up and now when they are coming down? Also, one last point, what are the business segments which you are seeing really great traction, which can be a big growth driver for us other than defense? Thank you.
We have already answered to most of your questions, but still we will reiterate those factors. First is there is a volume growth of around 13% in India and around 18%, 15 to 18% in overseas market. And there is definitely price rise in most of the products. That has led to a growth of almost 96% in this quarter. Second point is that the prices of raw material has definitely increased a lot in last 9 months. And we have lots of contracts with our local suppliers, and we procure raw material on spot basis. If you look at another point, what you said on that, how we will maintain in future. So similarly, we are anticipating there will be some falling prices, so our inventory level has to be reduced. So we are doing that.
Okay. And so lastly, which of our business segments other than defenses you think is gaining strong traction?
The most significant traction is coming from the coal market. The coal mining is definitely going up, in the country. Lot of experts have said in the past couple of years that there will be no growth in coal mining. But we have seen that there is a growth, and we are expecting the same growth momentum to continue in next couple of years.
Oh, okay.
So that will definitely help the company to give the more volume growth in coming years.
Sure. Thank you, sir, and congratulations once again.
Thank you.
Thank you. Next question is from the line of Saurav Jain from Astute Investment Management. Please go ahead, sir.
Yeah, good morning, sir. Very interested now. Am I audible?
Yes.
So, this is actually the first call that I'm attending, and, if some of my questions seem very basic, then, I'll be happy to connect with you offline. So just wanted to check, sir, that you talked about guidance for the future, and on growth, I just wanted to understand for the next 3 to 5 years, would you like to give any sort of guidance of, volume growth that you were expecting from the business?
Yeah, in the last quarterly call, we have said that after giving strong numbers in FY22, we have again given a guidance of 30% rise in this financial year also. And going forward, next couple of years, we are expecting that we should be able to grow at least 20%, and that's quite visible looking at various business growth opportunities for our company.
Sure. And we should take this at 20% on a value basis, sir, or on volume basis?
No, I am saying it on value basis because already there is a lot of price rise has already happened in last couple of, especially in last 3-4 quarters. So definitely value increase will be difficult, but we are expecting that there can be some minor corrections on annual basis. But mostly the growth will come from volume, around 15% volume growth or 4-5% value growth, price rise. So we are expecting 20% sales rise on next couple of years.
Sure. Because I was not able to reconcile, sir, that you said, that in this quarter you've grown your volume at 13% in India and overseas is about 15 to 18%, but our revenue has grown by 96%. So is it all due to variable pricing, which is, prices are higher, owning higher priced products?
Yeah, most of that is basically say if you take 15 to 16% volume growth and balance is from price rise. And if you look at defense sales also, it has increased by almost 37%. So all these factors has led to a price or the sales rise of almost 96%.
Sure, but this price rise is obviously something which is temporary, or it may go down also.
That is quite obvious, no?
Sure. And sir, this growth that you're talking about, what would be primarily the growth drivers for the future? Because again, I might be asking some very basic questions, but from what I understand, your industrial exposures business is 96% of your business, and only 4% is defense. So what might be driving this growth in the future?
We are expecting that sales from defense should reach to almost 20% in next couple of years, and balance will come from explosives from Indian market and overseas markets.
Got it. And you mentioned, 64 crores is the turnover that we have from defense in this quarter, which is 4%. So any specific products, sir, that on your website, what has contributed to the defense revenue in this quarter?
We normally, as a company policy, don't give the breakup on a product-wise sales, especially for defense products. So you have to go by the total revenue from defense, which is 64 crores.
Right.
Thank you.
Got it. And so just also, What is the current capacity utilization of our plants, all put together?
We have already shared a couple of times that we as a company have a variety of products, different SKUs, and terms of the weights are also different. Something is in tonnage, kg, length, meters. So it is difficult to give capacity utilization as a specifically product wise to the investor at this stage.
Sure.
And in our industry there are seasonality also there, which doesn't give the right reflection if you compare our industry with various other industries, which always works on capacity utilization like cement or steel. It is difficult to compare on that factor explosives with other sections.
Got it. And the cyclicality of our kind of business there on explosives, over 2 years, anything you'd like to say on that?
Please repeat again.
The business that we are in, is it typically very cyclical?
Definitely, our industry depends on the volumes goes ups and down based on the season rather than cyclical. Like in the monsoon period, sales goes down, and when the monsoon is over, demand starts picking up. It's the same like construction market.
Okay, got it. And this part, earlier participant touched on this part about investing in, Indonesia and Australia when we have actually been exporting from India itself. So any number like to give us how much of money we are investing for this plant in Indonesia as well as in Australia?
Can we have a separate detailed call with you after this investor conference call where everybody is listening to us and everybody is spending their valuable time? We can have this call directly with you. Is it okay for you?
That would be great, sir. That would be great. I'll take this offline.
Okay, thank you, Ji.
Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Sumit Jain from Ask Investment Manager. Please go ahead, sir.
Yes, sir. This is Sujit. And one question is on our billing in overseas subsidiaries. Is it in dollar terms for most of the subsidiaries?
Hi, Sujit. In some subsidiaries, we have dollar billing, and in some, we have local currency billing, and they're proportionate billing in respective subsidiaries also.
But in the main subsidiaries, key subsidiaries, how is the billing like? In which currency? So, for example, Turkey, Tanzania, the main contributors to the overseas sales.
It's in proportionate. As per,
Okay.
yeah.
And we had, kind of indicated and guided for FY23 and Australia and South Africa will start making money even at the PAT level. How is our progress on that?
We had said that in our last call that we'll be having profit at the EBITDA level. We had said that, and Australia will be starting in the third quarter. So we feel that in next year we should be at profit level.
So from third quarter, from Q3 onwards, Australia should be PAT positive.
Australia commercial production will start from third quarter.
Okay. And South Africa will be PAT positive when?
By next year.
So on a run rate basis, beginning of the year or somewhere in H2?
Yeah, maybe beginning of the year we feel that.
Sure. Thank you.
Yeah.
Thank you. Next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead, sir.
Thank you very much to give again chance. Any other country defense need we are thinking along with India?
Currently, nothing as such.
How many?
Currently, nothing as such.
Okay, nothing as such. And usually, how much net profit margin we got from defense?
For us, we are into explosives, whether it's commercial or defense explosives. So we speak on the margin-taking company as all the full range of baskets of products for defense as well as explosives.
So we can't bifurcate between defense and others?
Yeah, as a matter of policy of the company, we do not give bifurcation.
Okay. And sir, last question, ma'am. A 13% quantity-led growth is there in Q1. So for whole year, how much quantity-led growth we are planning this year?
Around 15%.
Okay, ma'am. Thank you very much. Okay.
Thank you.
Thank you. Next question is from the line of Arun Subramaniam from Ampersand. Please go ahead.
Yeah, I said thanks a lot for the opportunity. Just wanted to know the amount of forex loss and why that happened. If you can just explain again.
Yeah, the forex loss for the quarter stands at around 28 CR. Since our company operates in many countries, so if we see Turkey, the Turkish lira has depreciated by around 91% on year basis. Similarly, we had depreciations in Ghana, then we had depreciations in Australia, South Africa. So as a result, the unrealized forex losses.
Understood. And is it recoverable over time, or because of the hedge, or it is like a kind of a cash loss which is like done with?
It's unrealized losses currently.
Okay. So it can be recovered back.
Yeah.
And so my last question is that when you are giving this guidance of growth for this year as well as the subsequent year, and you are also talking about both price as well as volume-led growth, considering that your raw materials can be very volatile, what could be the reason why you are looking at a consistent 4-5% kind of a price hike even in the forecasted period of financial year 24 and beyond?
This is, as regards commodity never stays stable. So as per our experience of last so many years, we are giving the guidance.
Understood. And in terms of your growth, as you said that defense is something which will be growing a lot more than your overall revenue. Similarly, will exports be growing much more than your domestic revenue, or domestic will be the main growth driver?
So we talk on business as a whole. So for the current year, on the whole, we have given a guidance of around 30% on the top line.
No, what I wanted to understand is that in terms of growth prospect, which are the areas where you are going to see far higher growth than the overall industry? That is, it is exports, it is drone, defense, or the core domestic mining related business. Which are really going to be the better growth driver and prospects in coming years?
We do not give a detailed bifurcation on each customer-wise or product-wise detail. But for us, business as a whole will grow with the percentages we have said, as like for the current year we have said 30% and going forward maybe 20% year on year.
Understood. Thanks a lot.
Yeah.
Thank you. Next question is from the line of Manish Mahawar from Antique Stock Broking. Please go ahead, sir.
Yeah, good morning, everyone. Can it possible to share a revenue impact of forex loss in the overseas subsidiary? Because 28 crore is a EBITDA loss, right?
Yeah. For the year-on-year basis, around 162 crores. If we see, if we keep the currency constant as regards as on last quarter of FY22, so around 162 crores on the revenue part.
Okay, 162 on revenue and 28 on a EBITDA impact, right? Okay. And in terms of, can it possible to share the ammonium nitrate average realization for us for this quarter versus the last quarter, last base quarter basically?
So on RCF price, if we see the RCF price for this quarter as compared to previous quarter has gone up by around 15%.
15 or 50?
15.
15. Can it possible to share absolute per ton realization or cost?
We'll share it, we can take call later and then share it.
Okay. And after maybe the first quarter average price to now, July we have seen a correction. So what is the correction, absolute correction in the percentage term happened in the ammonium nitrate price for us?
As Manish has said, we're expecting a softening of around 10 to 15% in the second quarter.
Second quarter. Okay, understand. And the same correction we have seen to other raw material as well, like PETN, where we are backward integrated and we have internal plant as well.
Overall, this is on the overall basis of all the overall raw materials of the company.
Okay. And just in the raw mat again, in terms of, because some of the raw mat like PETN or emulsifiers, where we are backward integrated, does it mean at last maybe 3 or 4 quarters, particularly last 2 quarters, that we have benefited in terms of backward integration of some of the raw mats apart from ammonium nitrate?
Yeah, whatever efforts we have been taking since years, that has been reflected in the numbers.
Okay. And in terms of one of the comment made by Manish in opening remark, right, in EBITDA impact, there was 2 or 3 factors he said. One is the higher raw mat, and one of the factor second is the forex, and last point he mentioned, I think, some lower margins or price at one of the coal customers. Can you elaborate in that front? What is that exact meaning, one of the coal customers?
Generally, what happens, we have contractual terms with some customers and some are spot customers. So as per the formula, the price of the finished goods are determined. So it's not necessary that proportionate rise can be full 100% can be considered. So as a result, the gross margins got hit.
Okay. So basically, this is just a 3-month rolling over price, I think so, right? We have on a coal side. That is the right thing to understand. So maybe the full impact will be recoverable in the second quarter of this year. That's right?
Correct. The lag is there. You're correct. For a quarter, the lag is there. And secondly, as I said, it's not possible to pass on 100% prices because there are some fixed elements also.
Okay, understand. And in terms of lastly, in terms of a defense revenue perspective, right, we have seen a good growth in this quarter. So there is also some pricing growth impact will also be there in the defense revenue as well. And also the annual revenue guidance, what the money is highlighted at 400 odd crores of revenue. We are also considering this. This is a purely, I believe, there is some volume growth as well as the price impact will also be there with that number, right? So just what could be the price and volume growth in terms of this annual guidance perspective?
For defense, there is no bifurcation on volume or price rise. The defense, as we said, that current we have an order book of 538 crores. So orders keep coming, as in when the customer, as per the requirements of MOD and customer's requirement. So that captures, that is the revenue that Manish has captured while giving that currently we'll cross around 400 CR.
Okay, but the pricing element will also be there, right? In that, where the raw mat cost definitely will up in the defense part as well.
That is as per the contractual terms with them.
Achha. Okay, understood. And okay, yeah, that's from my side. Thank you, thanks, Shalini and the team.
Thank you.
Thank you. The next question is from the line of Sumit Jain from Ask Investment Manager. Please go ahead.
Yeah, thank you. Just wanted to check with you this 30% guidance, revenue guidance for FY23. Though it is difficult to predict broadly, if you can split between value increase and volume increase.
Hi Sumit, we had spoken on that. We said the current year we're expecting a volume growth of around 15% and balance should be from price.
Okay, and to the previous question, that is on our minds as well. In defense contracts, these would be fixed price contracts or there is some variation clause for the RM because the RM has fluctuated so wildly?
So it depends on contract to contract basis, right?
Looking at our margins, one believes that we are kind of protected there in one way or the other.
So now, as Sumit, we have been speaking, like for us, the company as a whole, we consider full basket of products, both exclusives as well as defense exclusives. So the margin is on full basket.
Okay, sure. All the best. Thank you.
Thank you.
Thank you. As due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you so much to all the participants. We expect a similar kind of dedication and participation from our investors in all the conferences coming ahead. Thank you.
Thank you. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.